Moving on now to precious metals. We got the breakdown that I'd been pointing to and concerned about for the last 2 or 3 weeks. Gold was down $90, finished down at 1861. The support level broke as I indicated that it might. And on top of that, we now have, so we had a very strong seasonal period in June, July. There is another strong seasonal period coming up in precious metals in November and December. So this is all around the buying patterns, particularly in Asia. So we are now in this interim period where October tends to be the weakest month of the year for precious metals. So we've not only got a significant technical breakdown in the charts, we've also got seasonal weakness as well. So it's hard to see how we're going to get much of a sudden recovery during October. So I think we might have another 2, 3, 4 weeks to wait on this sector. Now, last week, US dollar gold fell by 4.6, but Australian dollar gold only fell by 1.1. So you're likely to see Australian gold stocks do a lot better than overseas gold stocks. So again, for precious metals, and this is short-term comment only, because if you recall back, people that watch this video every week, I pointed out all of the things that were perfect for gold, and that was a medium to long-term situation, and that still remains. So these comments are only about the short term. Now, technically, there could be another 5% move down in gold, and I'll point that out on the chart. And if that happens, and I think it's a probability that that will happen, then we tend to see around about 2.5 to 3.5 times amplification in gold stocks. So a 5% move in gold could correspond to something like a 15% move in GDX. And it all ties in very nicely because it brings those both of those entities back to areas of likely support. And as I said, I think the local gold stocks they'll probably still have some downside, but it'll probably be fairly mild because the falling Australian dollar is shielding that drop in the gold price. So we'll take a look at the gold price. So let's look first of all at let's look at the daily chart first. So this is what I said last week or the week before. I think it might have been last week. On the plus side, I said that we were holding key support and the 50-day moving average, but on the negative side, we had a descending triangle formation, and that sentiment for the sector was still uncomfortably bullish, and that's never a good sign when you've got this sort of pattern. I also said that the price was reaching the apex, so a bigger move was likely quite soon. Or the other alternative was that the price just went sideways and allowed the overboughtness, if you like, to be resolved by time. And I said that the 50-day moving average was a line in the sand. Well, the 50-day moving average got broken on Monday, quite emphatically. And then, we've gone down very sharply and certainly didn't finish the week in any sort of positive fashion, not like stocks did. So the point here was that there would have been a lot of inexperienced traders that bought the breakout up through here, and they're not long-term investment buyers. And when the stock price or when the gold price broke down, then they would have been forced to flee. Now let's look at what is likely with the gold price. So we've bounced off the 38.2% level. It's likely now that we'll probably come down to somewhere around the 50% retracement level, which would also bring us pretty much to the bottom of this channel. And this is the trend channel that really started up in late 2018 that had been driving gold and gold stocks higher. So a pullback to the lower boundary there would make sense, corresponds to the 50% retracement. And if we look at so that level is around about 1760, 1770, that sort of area. And if we look at the daily chart, You can see that that also corresponds with the 200-day moving average, and it's also pretty close to these previous highs as well. So everything sort of culminates around about this 1760, 1770 area. So I think it's quite likely that we'll get a move back to that sort of area. So that would be the first point, that a 50% retracement to the 50% level on the 200-day is likely, and that represents around about 5% lower than where we are now. So I think that's the probable outcome. Now, if we turn to stocks and how that impacts stocks, this is GDX on a daily chart, where we're clearly pulling back now. We've got some key support here around $32, and the 200-day moving average is around $33. So I think this is the area, and that would be about a 12 to 15% pullback from where it is at the moment. And that all, again, ties in with about a 5% move in gold. So, yeah, it all just lines up rather nicely. So that's how I think the precious metals sector is going to go, and I would probably be pretty careful and cautious for the next 3, possibly 4 weeks in that sector.